Wanted to follow up on today. We did like got an A&W caffeine sugar free going on here. Anyway, let's talk about what happened in the market. Holy cow, down 475 points on the Dow Jones today. Why? Because of Chase, Wells Fargo, and Citibank all said that their profits were down. Why were their profits down? Because you, the consumer, are getting smart finally after 2 years. Took 2 years, but people are getting smart. What's happening is these banks have to start paying decent interest rates on money markets and CDs to keep the deposits in house. People were start to flee because some of these banks weren't offering competitive rates. Well, the last 6 months, I think banks finally figured it out. Actually, the last 9 months, banks have been being a hell of a lot more competitive because they realized that people were waking up. So I give you guys a big applause. Applause to you, the consumer, for managing your money appropriately and finding out those opportunities in money markets and CDs. No reason to leave all your cash sitting in a savings or a checking account when you can be making 5% or more for 6 months, 3 months. Personally, although you're not going to find this at most of the banks, you're going to have to go to a brokerage like Fidelity or Schwab or E-Trade or one of these other guys. If you go to a brokerage account, you'll be able to get a 30-day CD, and that's what I've been doing for the last 2.5 years, I think. So as the rates were going up, I just kept renewing, getting the higher rates, just keep them rolling. Now that with inflation the way it is, people were worried that come June, the Fed was going to start lowering rates. Not going to happen, folks. Not going to happen till at least maybe September if they're lucky. With as hot as inflation is on the wholesale and the consumer front, you're not going to see the Fed bring down rates at all. So, you can probably, if I'm waiting to start hearing people say, hey, maybe the Fed should be raising rates, but the banks are already kind of got their what's in a vice with the rates the way they are. So that's why the Fed is very reluctant to raise unless they really, really, really have to, because every time they raise interest rates, all those bonds and things that the banks own, certificate of hey, Jessica, thanks for joining. Doing a little finance tutorial today, I guess, teaching you guys about why the market went down 475 points today and actually had the worst week of the year. So Dow Jones was down big time this week. I don't know what the number is. GGG, what's that all about? All right. Anyway, so the Fed doesn't want to raise rates because if they do, you're going to see the banks scream because the bonds that they're holding on to are going to be worth less, and if they have to sell those, they're going to take a loss on them. And the Fed and the Treasury had a solution last year, but that expired. I forget what they called it. It was there was some program where the banks could turn over their bonds to the Fed and get a loan, face value loan for like a year, and they terminated that. So the banks can no longer do that out of the generosity of the government. They're going to have to come up with some other way to make money when they need it, and they need to manage their money a little bit better too. So that's part of the problem. These banks, if you don't realize it, Yeah, if you had 2K in a checking account, you're lucky. One. Two, I would try to get it invested in a CD or a money market where you can get some better rates. I wouldn't think your checking account's going to be offering you more than maybe 1 or 2%. You should be able to get 5% or above now in a good short-term CD or money market. So check with your bankers. And also, if you have a brokerage account with some company, check with them. They usually offer CDs. Oh, geez, yeah. They're stealing from you. Let's talk about that. Another reason why the banks were not, their profits are down is every time you let your money sit there, they're investing it. They're letting some other bank borrow that money potentially and getting 5 or 6% from that bank overnight. They can do loans. Some of these large banks do overnight loans to other banks, and they're making 5 6%. Um, so all that money that you have sitting there in savings and checking, and it's not getting, you know, interest rate that's a market rate. Like I said, right now the market rate is like 5 and a quarter. So you should be able to get some decent rates, but you just want to make sure that you're not tying up your money too long because rates may go up in the next couple of months. There's a Fed meeting at the end of the month, like May 1st, beginning of next month, end of this month. We'll see what they do. I got a feeling they're probably going to punt like they've been doing the last couple of times. But if inflation comes hot again next month, you're going to see the Fed start considering raising the rate another 1/4%, which would take it up to 5.5. Um, so there you go. So there you go. But as I said, part of the reason that banks are losing their profits is they have to pay people the market rate, and they're having to put it in CDs and money markets and things that they're not illiquid to the bank. They're not real liquid to the bank. The bank's gotta leave it there and can't be investing it overnight like they did in the past. It was in checking and savings. So um, give the consumer a kudos, thumbs up. Give me a thumbs up. There's no likes up there. I see I got 5 people here and no likes yet. No likes. I'm teaching you guys about finance for a change here. So there you go. Inflation is raging. And if you're in debt,